We're actually suffering from the two worst economic trends that most rich world countries have seen since the beginning of 2022.
We've just been around the G7 on our budget airline to get a sense of what is happening in some of the other big economies around the world ahead of Jeremy Hunt's first budget on Wednesday. Let's find out what all of that means for the Chancellor now. Mehreen Khan is the Times' economics editor and joins me. Morning, Mehreen.
Morning.
What was really striking, listening to our reporters around the world, is that, and maybe this is obvious, but lots of the problems that we think are affecting the British economy are affecting the economies around the world. There's a housing crisis in Canada. There's an ageing population problem in Japan. There's high energy bills in Germany. Britain's got a bit of everything.
Exactly. And I think the UK has long found itself in, I think, something the governor of the Bank of England said, which is called the worst of both worlds, which is that it has the shrinking labour market, the tight labour market that the US is experiencing, which is why the US economy is red hot. But it also has the energy crisis that the Europeans are suffering from. And by, geographically being in the middle of those two economic neighbors, we're actually suffering from the two worst economic trends that most rich world countries have seen since the beginning of 2022. And that's a partial explanation for why the UK's growth will be sluggish for most of this year and probably a lot of next year, why we still haven't reached our pre-pandemic size. And then there's the other idiosyncratic factors, of which Brexit is definitely one of them. But I think as for the Chancellor, I think he'll probably stand up in the House of Commons on Wednesday and sort of celebrate some of the recent GDP figures and sort of sigh a bit of relief at the fact that we're not in a recession. But this is definitely not the end of this period of stagnation. We're probably just about in the middle of it, I think.
Is there anything, putting Brexit to one side, because that's a whole other can of worms, is there anything that the government could have done to address some of these long-term problems? Or is actually, like you were saying, that they're structural, we're part European, part American economy, that's how we've ended up in this problem?
The government would argue that it's been doing a lot of crisis fighting, but we are also in the relatively unprecedented era of having at least 4 chancellors in 12 months. And that's not a recipe that, will give you long-term structural thinking. I think the political instability is also one of those idiosyncratic factors. The fact that we have had changes of government, albeit within the same party, who have slightly different ideas about how to do things. So, we had a levelling up strategy under Boris Johnson. Liz Truss wanted to go for a slightly more, ambitious and bold growth strategy, which is about cutting taxes. Jeremy Hunt is now stabilizing the public finances by maintaining and raising taxes. So the long-term strategic thinking, which I think probably should have happened in the immediate post-Brexit era, so what kind of economy does the UK want to be after Brexit, it hasn't really been done because there's just not been enough bandwidth, which is, I think, a generous interpretation, not enough bandwidth among the Treasury officials and government officials to do this strategic thinking because of the political instability. Then add on to that a pandemic and a war, and all of it is sort of, we're in a short-term period of policy making, and that's not going to stop because we've got an election coming up, which is another recipe for more short-termism for the next 18 months.
I suppose it goes back to the whole thing. I think even Rachel Reeves was making this point last week, that a return to boring government is a good thing, because boring means not chopping and changing the whole time. And that actually, we talk about the economy sometimes as if it's a sort of organism all of its own. It's just human beings and people, whether in the stock market or if they are starting businesses, investing in businesses. And what consistency is probably worth far more than any whizzy bang idea that the latest chancellor might come up with.
Yes, I mean, certainty about the business environment, which again, Brexit didn't really help that. Certainty about the tax environment, Liz Truss didn't really help that. We're now in a mode where I think actually some parts of economic policy are becoming exciting. I mean, I speak this from a low base, but it's kind of what I have to do every day. But we're moving into an era of, I think, quite radical industrial policy around the world. And this is industrial policy, which is about basically throwing taxpayer money at green industries, which is what the US is doing. And maybe I think the Europeans are going to respond. Britain really isn't really part of that, I think, slightly dynamic debate about what happens to supply chains, what kind of green industry we want to have, what economic security in the 21st century looks like when you have, quite, fractious geopolitics. That's another, I think, area where we want and we would hope that the UK has an understanding of where it wants to position itself, between the US, Europe and China, closer to the US, closer to Europe. We're not really sure about these things. And that's another thing I think businesses would like some certainty on, because the truth is that if you're running a battery cell company or trying to develop green hydrogen, the US government is throwing money at you right now, and it's pretty tempting to up sticks, leave Britain, and go and set up a factory there. Why not?
That's really interesting. Well, let's take a look at what we might actually get from Jeremy Hunt on Wednesday. There'll be more efforts to encourage the over 50s, long-term sick and disabled, and benefit claimants back to work. He's expected to cancel the planned £500 hike in average energy bills, which is due to come into force next month. There's talk that he might increase the amount that you can put in your pension tax-free, raising the £40,000 cap. We're hearing today there's an extra $5 billion for defence. Well, that's much less than Ben Wallace wanted. There's also the question of public sector pay deals as strikes continue. And you've got Conservative MPs pushing for tax cuts. I mean, even to stand still on lots of those things, it's going to cost lots of money. Are you expecting this to be an exciting budget? Well, there's always lots of talks of rabbits out of hats, Mehreen. Do you think we'll get many rabbits?
I think given that UK budgets are now made for the consumption of investors and financial markets as much as they are voters, that definitely limits the room for surprises, because there's not too much appetite for surprises. I'm also speaking to you at the beginning of a week where the US government has effectively had to bail out a bank, and the UK government has only been spared that because somebody has come in to buy the UK arm of Silicon Valley Bank. So things are breaking in the financial system. That is another recipe to say, let's not surprise people with too much fiscal expansion or tax cuts that nobody's really expecting. So will it be boring? Yes, definitely. And if it's relative to the mini budget, then all the budgets for I think now until a few years are going to be boring in comparison. I think the big question is all those things that you reeled off. So a couple of them, I think the big question is, are they enough? Is it enough to get people back into the workforce by helping them put a bit more and take away a bit more out of their pension pots, or changing some tax incentives? Or is actually the problem, as we keep hearing from many economists and also the Bank of England, is that people are not coming back to the workforce because they're sick and they're on waiting lists that are ever increasing to access healthcare. And that's the main sort of bottleneck that is stopping people coming back from work. So can these tweaks and sort of incentive changes actually make a substantive difference? Of course, the Chancellor would tell us they will, but I think the jury is out on whether that's bold enough action to actually tackle a very chronic problem of people falling out of the workforce, which we've seen for the last 2 years.
Just finally then, Mehreen, as we look ahead to Wednesday, what's the thing that you'll be most keeping an eye out for? What's the figure or the policy or the thing that the economics editors will be most looking out for on Wednesday?
Well, we're quite a sober lot, but I'm going to read the OBR's forecast pretty carefully, because I think the initial one we had in November made a lot of assumptions about growth, which I think were too optimistic. We expect some of them to be pared back, but it'll be interesting just what the OBR calculate as this, magical fiscal headroom that the Chancellor has. And we've had various figures from 30 billion to 160 billion in the last week. So I'll be interested to read that, and also how the Chancellor takes that number. And then if he wants to be prudent and say, well, I'm going to save half of this and spend half of it, or I'm going to spend most of it or save most of it, that's going to be interesting to sort of determine what the politics of this budget are. If he wants to be very, very sensible and basically squirrel a lot of it away to give away closer to the election, or actually if he thinks right now is the right time to be a bit more stimulative and give people more money back in their pockets.
Yeah, it'll be really interesting. Mehreen, thank you for that. Mehreen Khan, then, The Times' economics editor.